everyone. This is Connie Loizos of TechCrunch, and I'm sitting here with Glenn Solomon of GGV Capital, a cross-border venture firm. Glenn, thank you for being here. Glenn is an investor in Square. So let's talk about what happened yesterday. How are you feeling about the offering? Was sort of underpriced. We were expecting it to go out at, 11 to 13. At the last minute, they decided to price it at $9. Was that the right decision in retrospect?
You know, it's difficult with IPOs. Really, things go down to the wire, and you have this very tenuous balance between fear and greed in IPOs. Mm-hmm. And Square priced where the bankers suggested they'd have the best opportunity to bring in a good book of investors, long mutual fund, deep-pocketed investors that would be committed to the company, which is really what you want to achieve in an IPO. Mm-hmm. And I think the company realized, hey, this is a financing event. It is not the end of the road. This is just one step in a long journey. And so I think they made a good decision. But you saw with the trading on the first day, with the stock up over 40%, mm-hmm. that there really is a lot of interest in the company. And so I think it was probably overall a good event for the company and the investors involved.
There has been a lot of talk, obviously, about that pop, although I think it's trading sort of at a flat level today. Do you think too much focus is spent by the media on first day performance? It does seem so, fleeting, obviously.
Yeah, I think people get too overly focused on, hey, where did an IPO price and what was the price relative to other financing rounds. It's just the financing. Mm-hmm. The stock is going to do what it does after that. An IPO is kind of the maximum point of uncertainty because you've got a management team that has no history with public investors, right. Comes to the market, and then you've got investors that just don't really know the story, and they're asked to line up and invest. And so sentiment plays a very big role in where IPOs get priced, not really underlying performance generally. Right. But over time, what matters most is the underlying performance and the way a management team performs over time. And so things have a way of washing themselves out. Look at Twitter, and Facebook as contrast. Twitter went public to much fanfare. Right. It was a huge first day pop, and it's generally been a pretty tough stock to own ever since. Whereas Facebook went public and it looked like an awful IPO and the stock traded down. The stock's been up 4x since. So it just tells you that the IPO isn't something to focus that much on.
Right. Obviously, speaking of Twitter, Jack Dorsey leading both companies. How did you feel when you found out that that was going to be the case? And is that a concern going forward?
I can understand why it should be, people would wonder whether or not that's going to have an impact on Square long term. Mm-hmm. And I thought about it. But after speaking with other members of the management team and Jack, here's what I've concluded. I think that the business itself is very strong. Mm-hmm. And Jack has done a great job of recruiting a really strong team around him. There's a lot of experience on that team, and folks have been working together now for quite some time. Okay. And so they've operated already in an environment where they are already working together and not necessarily with a strong head CEO telling them what to do every day. So I think they're well prepared for an environment like they've got now where Jack isn't 100% of his time at Square. Right. And this isn't actually the first time he's done this, right? If you remember, he ran product at Twitter a few years ago for about 6 months while he was still CEO at Square. This is very similar to that, where he's spending probably half his hours of the day at Square. But if you know Jack, he's a very organized guy. Right. And so the time he's there is not time wasted.
What do you think this IPO does for the overall market, which has been very tough this year?
Mm-hmm. Yeah, overall IPO market for venture-backed tech growth companies has not been all that strong. Right. I don't, if you look at the reasons why, I think there's actually appetite among public investors for high growth names. And you can see if you look at the aftermarket performance of Square and of Match, two deals that went public yesterday, which has been strong, it's a good indicator that investors are looking for growth. Public investors are looking for growth. So there is demand for IPOs, but the supply hasn't been there. And why not? Well, one big reason is that the alternative for private companies to going and raising money in an IPO, and remember, it's a financing event, the alternative is to raise money privately. And
but I mean, everybody says that. It's sort of hard to believe. I mean, there are companies that are making a lot of money. I think they just can't get the prices that they want on the public market. So, I mean, that seems to be the...
You're absolutely right. If you're the CEO, let's say you're a board mm-hmm. and a founder and CEO of a high growth private company, mm-hmm. and you want to go raise some money, you're looking at alternatives. One alternative is you go raise money from the private market. And in the private market over the last several years, months and even years, the opportunity has looked pretty good. You're getting high prices, you're getting the money pretty quickly, you're getting lots of money. There's no shortage of capital out there. You're getting it from investors that are generally supportive and want you to try to grow fast. And so you don't have the regulatory and reporting requirements that come with being public. So that alternative has looked a lot better, and price is one of those features.
But that's changing now, especially with some of these fund companies suddenly marking down these investments in a very public way. Do you think that's going to have a big impact on companies' decisions to stay private?
It's a great question. I think you're right. I think that if public investors who've been a big part of driving the pricing up for these late stage private rounds, if these public mutual funds and large hedge fund complexes, if they get out of the market and capital moves quickly, so it's moved quickly into this segment, but it could also move out.
Right.
If that happens, then I think you'll see that alternative, that late stage pre-IPO round alternative, look a lot less interesting to management teams and boards. And then as a result, I think the IPO will start to look more interesting as an alternative. And if that's the case, I think you'll naturally see more companies trying to file and go public.
And that seems to be obviously a good thing, although you're going to be seeing a lot of prices that are possibly below where VCs were hoping they would be. Is that fair to say? Or?
I think companies that have raised money in the last 18 months privately at high marks, if they go public, let's say in the next 12 months, unless something changes in the public market, we will see lots of companies that have down marks to the IPO. Now, I don't think it's nearly as big a deal as a lot of watchers want to make it out to be, because again, it's just a financing event. Stocks trade up and down all the time, and the more important thing is what's the long-term trajectory for these companies.
Right. Great. Thank you, Glenn. I appreciate it.